All right, what is up, guys? So we're going to be doing another market therapy with Mercury kind of thing. I'm going to go over some hindsight, where I think the market is at, really, the entire environment. We're going to talk about Pepe. We're going to talk about sentiment, stuff like that. So hindsight and some foresight as well, current analysis, all that kind of good stuff. Before we get started, I do want to say I do Bybit giveaways every single month. So people on my Bybit referral link will be eligible for whatever giveaway. In the month of April, I gave away two PS5s to two different people. And that was just simply for signing up to Bybit underneath my referral link and actively trading on Bybit. So that's really all you have to do. If you hit that requirement, then you're automatically eligible to participate in any future giveaways. And yeah, like I said, I do them every month. I'm not entirely sure what I'm going to give away this month, but we'll see. So, with that out of the way, we'll go ahead and get started. Yeah, essentially, the green circles and the red circles and the orange circles are basically my way of digesting this price action in terms of trend. And so, I put out a tweet the other day that visualized this exact sort of picture. And I was just saying the way that you screw up in markets is by trading these periods, right? These red periods as if they're green periods. You trade these green periods as if they're red periods. And you trade this orange period, right, as if it's going to become this green period or this red period. So you can kind of see how outside of, or really I should say inside of this orange zone, right, we have a little bit of uptrend and we have a little bit of downtrend, but we can acknowledge that we're mostly still trapped inside of that zone. Right? Maybe we didn't know that at the time, and truthfully, I didn't. Right? And whatever it is, what it is. You come to that realization eventually, but that should be the kind of way of thinking. So. It's really a hindrance to not be able to think big enough during expanding periods, right? And thinking too big in contractionary periods. So get that out of your head. Make sure that when price action is trending, you are on this the right side of the trend. You're not trading an uptrend as if it's a downtrend or as if it's sideways, and you're not applying mean reversion kind of strategies in a trending environment. And inversely, right? Don't be a dip buyer during a downtrend. Don't be trading a downtrend as if it's an uptrend, and don't be, trying to mean revert. Have mean reversion plays in place and applying those kinds of strategies in a downtrending environment and in a very sort of strongly trending environment, whether that's up or down. And then inversely, don't be applying trend trading systems in an environment that is not trending. It's just illogical, right? It doesn't make a lot of sense. People love to be rational in crypto, and that ends up being a lot of their handicap. Uh, this price movement in itself is not rational by any means. The market does not have to be rational. It doesn't have to be logical. Essentially, you are here to put yourself on the right side of a trend, and you understand that crypto itself is maybe innovative, right? But at least speculative. And with speculation comes a lot of volatility, and with volatility comes opportunity. So you are here to take advantage of opportunity, which means that you're here to take advantage off of the volatility, uh, which means exponential moves towards either the upside or the downside, right? We're all here for the exact same reason. You are in crypto because you believe that there are drastic sort of mispricings, whether that be way too low, right? And everything is super undervalued and will one day move exponentially, maybe new all time highs, etc. Or you think that it's way too high, right? You think that a lot of these coins are vaporware and it deserves zero, and you're looking for short entries and you want to short into the ground and have a nice little bull market of your own as everyone else seeds, right? So regardless, you're here for those kinds of moves. So when you see that market start to represent that kind of a move, even if it's just the start of it, right? If you are able to sort of take on a greater context and adapt with whatever the market is doing, then you should put yourself in a position regardless of whatever happens next. Even if, right, you apply that sort of way of thinking a few times, and price action only gives you right a 10 or 15% move, something like that, right? And then the time that you do apply it the next time around, right? Let's say that you're a long only kind of person like myself, right? The next time that you apply that same exact system, it gives you a 40%, 50% move, right? This is the value, this is the appeal in being a trend respector, right? You want to respect the trend. So stop applying strategies arbitrarily and apply them in the market environment that that strategy is created for, specifically to thrive in, right? Trending sort of strategies, my 2 hour, or I'm sorry, 200 moving averages, there'd be the 200 MA, 200 EMA, my market structure interpretation, all that kind of good stuff. My little Timmy 4-year old, hey, which way are we headed? Top right corner or bottom right corner? Um, which, at the moment, we're not doing either of those. Uh, that kind of analysis, right, thrives in trending markets. So when we start trending, I'm going to apply that kind of a strategy. And then inversely, when we stop trending, I'm not going to apply that strategy. At that point, I take on more of the mindset of like a range trader. And, we go from there. So, really quickly, whenever I pull out, silly little graphics like this, there's always some smart aleck who has something to say, and people, not necessarily the people who are responding. If you're watching this and you were the person who responded on Twitter, I'm not knocking you. I'm sorry, but there are always going to be the people who say, "Oh, okay, great. So now we just have to know when price action is going to trend very, very strongly, and then create a green circle and fall in line with Mercury's stupid little colors and blah 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 blah." Right? Hold on 1 second. Let me show you a magic trick really quick. All you got to do is hide all these. Right? You get rid of them, and then we go here and we turn these on, and wow, oh my, would you look at that? The moving averages depict the trend for you. Wow. It really is amazing how that works, isn't it? It's almost as if price action was going to start trending, your moving averages would have to skew in this kind of a direction, right? It would just have to. And then if you wanted to downtrend, you would have to get below those moving averages so that you could bring the average down. And then if that moving average gets skewed downwards, right, price action is downtrending. Wow, look at that. So it's not that, you have to be the genius. It is more so that a simplistic kind of approach and just being able to assess which way the market is headed in either direction from a very simple kind of perspective, right? That alone can bring you a massive sort of edge just because you understand what the market is currently doing. And if you understand what the market is currently doing, you kind of have in a hunch as to where the market may go, right? I would hope if we are heading towards the top right corner, I would imagine that the market continues to head to the top right corner. If we are going sideways, I would imagine the market continues going sideways. If we're going down, I would imagine the market continues to go down. That's quite literally what a trend is, right? It's not a permanent. We understand that the trend will inevitably break. But the idea is you want to be able to ride the wave and profit off of the wave, or at least stay away from the wave, right? If you're talking about a downtrend, and bring yourself some sort of opportunity cost, or really a higher purchasing power, right? You want to do that for as long as possible. And then by the time that the trend shifts and a new wave starts or that wave crashes, then it doesn't really matter, anyways. So somebody was saying, oh, great. Now we just have to know when the colors are going to come into fruition or something along those lines. And I want to point out to you that all of those circles were not hindsight by any means. I was the colors, right? So you can go back, you can go look at all of the tweets that I've given since the start of the year. They all fall in line perfectly with everything that you just saw, which is also, again, I'm mostly just going to be a representation, or really an interpretation or a voice for the trend at any given time. So when we're going sideways, right, I'm saying, hey, the trend is still mostly favored towards the upside, but at the moment, the most relevant thing available to us is sideways, right? and we kind of shift our context and our perception of probabilities along with whatever the market is doing at that time, not with what we think the market may do, right? Massive difference. And from there, we form a little bit of uptrend. And then from that uptrend, we start to shift into a downtrend. So then I flip bearish, right? People are making fun of me. Oh, you were just bullish. And actually, I didn't get made fun of this time. Last couple times when I flipped bearish here, people made fun of me. And then when I flipped bullish here, people made fun of me. But this time around, people actually gave me props. It was very odd. So this is, of course, why we ended up chopping, because you guys didn't seethe at me flipping bias for, you know, finally. And instead, people are like, oh, look at how well Mercury just adapted his bias. He was just, bull posting not too long ago, being max euphoric and calling for his parents' retirement and blah, 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 and whatnot. And now he's calling for zero, right, during this downtrend. And then from there, I stopped taking on a trend style bias because at that point, the trend stopped getting respected. So from here, when we are shifting, right? We have an uptrend, and the uptrend portrayal is better portrayed in this price action by the 2-hour 200 moving averages. So when we have 2-hour 200s, that's why we're saying, hey, we're still mostly skewed favorable towards the upside, but the most relevant analysis available to us at this moment is sideways, right? So we end up breaking out of that sideways. At this point, all time frames are bullish. So at that point, the bullish argument has won. Your sideways argument has resulted in upside anyways. I would imagine that because the chart is heading towards the top right corner, we continue heading towards the top right corner. And lo and behold, that's exactly what we did, right? So we go on to make another local high, right? Another higher high. We continue the trend on all time frames, and then from there we actually lose the trend. So losing the trend makes me think, all right, this time's over, right? This was actually a daily market structure shift in my opinion, so I was assuming bearishness prior to the breakdown. This is not hindsight. This is at present time. This is exactly the analysis I was giving you on Twitter. And then from there, we lost the 2-hour 200s. Every other support level in the meantime meant absolute shit. Your 4-hour 200s, all those kinds of stuff that were less relevant in my humble opinion, didn't hold, and therefore I was right on that analysis that they would be less relevant. So the downtrend kept downtrending. Basically, I assumed a downtrend because the chart was headed towards the bottom right corner. Based off my analysis, I was able to perceive that, and then the chart definitely started to agree with those thoughts. That was that red circle inside of the greater orange, right? The issue here is that this reclaim, right, that reclaim of trend should lead to a resumption of this initial trend. So the fact that it didn't means that now we're starting to get very choppy. So let me put this in perspective for you. You have one bias, right, for what is this, like 45 days or something? Okay, it's like 35 days. So you have one bias for 1 month and let's say 40% of price action, right? Keep that in mind. One bias, 1 month, 40% price action, right? Now you have one. So you had bullish, right? So that's one. Now there's two. Now there's three. And then there's four. Four bias shifts in 1 week and 8% of price action or something like that, right? Four bias shifts in 1 week that encompasses 10% of price action. And prior to that, you had one trend for an entire month and it encompassed 40% of price action. Do you see the drastic difference there? Do you see how the market environment itself has shifted and taken on an entirely different approach? And from there, the safest assumption in terms of probabilities are not upside or downside. The safest assumption actually is more chop, more illogical price action. We're probably not going to respect these 2-hour 200s moving forward. We need to drastically adjust our approach. And instead of taking on such a heavy trend trader's bias and trend trader's mindset, we need to adapt into something more along the lines of like a range trader. And then we go from there. So if we're taking on the mindset of a range trader, then I'm going to draw a range and put less priority and less emphasis on a trend style analysis until the range breaks, right? That's essentially the mindset that I want to shift into because basically all I'm trying to say and all that the market is really showing me is that nothing significant is occurring within this range, right? So within this range itself, we could go up or down, we could flip the bias intra range, and nothing significant, or at least nothing more significant than all of the price action that's capped inside of this range is going to occur, right? It's not really going to, come into fruition just because we are below a low time frame trend portrayal intra range, the 30-minute 200 moving averages, right? Nothing's really going to or supposed to come from that, or it's not really presumed to come from that just because we're below the 30-minute 200s. All that that means is that we may go on to test the mid range and maybe onto the range lows, right? Which, by the way, I'm not a genius. People are going to ask, how did you know that that's the range lows? I didn't. I'm not here to bullshit you. Never, really. Uh, this would be the range low. Technically speaking, you want to draw first high and first low. I always just use my perception of it and kind of go with my own discretion, anyways. But with this low being locked in hindsight, I can kind of justify moving my range low up to there instead. But regardless, the intra range bias is dictated by the 30-minute 200s, which means that this should be a bearish retest of the mid range and a local trend resistance. And it was, right? Except for it didn't hold for too long and it didn't really give too big of a rejection. Instead, we reclaimed it, get back above, and this should be, right? If this was a bearish retest, this should be a bullish reclaim. So it should be a reclaim, retest, and then continuation off of that exact same support level and, continue that sort of a trend intra range. So this does not necessarily mean that we have to flip bullish, right? And start assuming that 32K and new highs and 35 and 40 and I get to retire my parents, right? It doesn't really mean that I get to justify all of that just yet. All it means is that the bias inside of the range, or I guess if you're trying to scale your bias to something greater by using something inside of the range, right? Insignificant price action, and you're trying to assume more significant moves based off of this insignificant price action, really all it would do is skew your bias from 50-50 to 51-49. So you'd be giving a slight edge to bulls in the sense that if you ever wanted to break out above this range, you would have to test the range lows and reclaim this region, right? And then form an uptrend into the range highs and then inevitably break out above the range highs, right? That just has to happen. You cannot create a snowman without forming a snowball first. And again, none of this is hindsight. I do have a journal, and it is kind of private. Only my friends and family see it. So it's about 50 people or so. But I am thinking of making a public journal, and maybe that'll be in the form of like a Discord, and that'll be totally free. Everybody can come and join. And I just log my thoughts on the market daily. But this is exactly what we were discussing. We were saying if there's a region to retest as resistance and continue downtrending, this is the zone to do that at. And then when we broke out above that region, we said, guys, just so you know, we're breaking out of above the 30-minute 200s. This doesn't mean that we get to flip into moon boys just yet, but it does definitely skew the bias a little bit more towards the bullish side in the sense that we're a little more likely to continue into these range highs and maybe, right, maybe even a break out above those range highs as well. And at that point, start to form some much stronger and much more prevalent bullish arguments, right? And at least at that point, if and when we got there, we could have the luxury of not having to shift our bias on the drop of a dime, but rather gradually, right? So you're starting to assume, okay, yes, we're still ranging mostly, but inside of the range, we have a little bit of an uptrend, right? So you start to skew your perception of those probabilities and your favored outcomes a little bit more towards that upside bias. And even in the event that we come up into range, or I'm sorry, range highs and reject off of the range highs, at least you were the person who anticipated us to get to the range highs in the first place so that maybe you could look for short entries or right adapt in the event that we finally did break out above the range and form more prevalent arguments. So there's an edge in terms of just anticipation. Even if you're not able to take action off of, you know, trading the analysis itself, just simply assessing what's currently happening and therefore what may happen in the future, you give yourself a massive edge because you at least are able to anticipate price action. So then, if that price action comes into fruition, you're not caught off guard. It's impossible to be caught off guard by the market if you're just simply an interpreter for what the market is currently doing. That really is a major point to this video, I would hope. So again, it's the very 4-year-old analysis. If you ask little Timmy, which way is the market headed here? He's not going to know what to tell you, right? But if you ask him here, he knows exactly which way to tell you. And if you ask him here, he knows exactly which way to tell you. So it's just that. But on the greater scheme, right, when we circle out the price action as a whole, I still don't know what's going on here. Are we going up? Are we going down? I don't actually know, right? And then you zoom that out further, right? What's happening here? I don't know. Are we going up? Are we going down? I can't tell. Someone's going to tell you, oh, these are lower highs, right? And someone else is going to tell you, yeah, but we made higher lows, right? What is that? Consolidation. So that then agrees with sideways. So the last thing that I really want to talk about in this video is the attempt to scale assumptions via market sentiment and using context in the greater market and applying it to an asset. So, obviously, what I'm referring to at the moment would be Pepe, the meme coin. So, as you are, I'm sure you're aware, Pepe and other meme coins are having these crazy rallies, which typically 9 times out of 10 is indicative of major froth. So, froth meaning the market is going to top soon, and everyone's just gotten way too greedy and way too euphoric, and there's no way that this is sustainable. And people are going to start rotating and taking profits, or they're not going to take profits at all. And then by the time that they do see a major pullback, they're going to sell at a loss or whatever. And that's just going to be, everyone's going to be piling on top of each other to get out, and the entire market's going to dump, right? So there's that. And I think it's probably fair to say that most of the time, that is a correct analysis, right? The issue with that assumption is there's no way to really invalidate it, first of all, because you're taking on a very, very speculative bias inside of a market that has no bias at the moment, right? The market is not biased. The market is just simply going sideways. It can either go up or go down from here. There's no other option, right? It can continue going sideways, but eventually from that sideways, it has to either go up or go down. So you are essentially betting everything on a coin flip. The issue becomes, while most times that previous analysis of, hey, this indicates froth, it indicates a major top, people are getting overzealous and blah, 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 whatever, right? Even though most times that's correct, the few times where it's not correct, the market just gets that much more irrational. So, you've heard the saying before about how a market can remain irrational longer than you can remain solvent, and that very much is true. So, don't get too biased just because of, abstract thoughts, just because, it's being regurgitated on Twitter. So, a lot of these people, and potentially rightfully so, right? Every single time that we see this kind of froth, there's always going to be the majority, crowd thought is, all right, fade this. This is probably a top indicator. This is probably indicative of greed. This is probably this. This is probably that. I want you to know that this is everything that my Twitter timeline was at 20K BTC 2 years ago, or right? This was the exact sort of vindication that the crowd had at the same time, right? After meme coins running and everything catching a rotationary bid, and then going to the very far end of the risk curve, and everyone just being massively greedy, NFTs starting to pick up heat, DeFi, right? All the DeFi coins just fucking throw your money into something and lock it up there and get a ridiculous, stupid APY percentage on your money and just let it compound continuously. and then, oh wait, the asset that you're actually invested into is also appreciating, so not only are you making sort of yield on your investment, but that asset is also increasing in appreciation, right? So it's like absolute euphoria, and people are arguing these abstract thoughts and saying, okay, this is froth. Okay, celebrities are tweeting about random coins again. People are creating NFTs and blah blah blah, and then the market continued, right? And then the market resumed the rally that we all know and love. And it went on eventually over the course of the next few months into 64K. But my timeline was arguing euphoria since 25 or 30K, right? So it's a high sort of probability indication, right? It's more like the times that it works. I'm sorry, it's going to work most times, but the times that it doesn't work, you're going to left or be left sidelined for just absurd kinds of moves that you cannot even fathom. And if that is the case, and you are solely betting on heads or tails, um, you're kind of screwed. You make it incredibly difficult for yourself to adjust to whatever happens next. And my entire philosophy in trading is literally stemmed around the idea of being able to take advantage of opportunities regardless of the outcome, regardless of whatever happens next. So, again, if the high probability indication of sentiment or whatever means that the coin flips and lands on tails and we go down from here, and this is the most obvious distributionary period. I don't even know if that's an actual word, but it's a distribution. Man, I can't talk. Period. Right? Everyone's selling their coins and dumping on our heads, and oh look, right, your favorite celebrity tweeting about Pepe is the top again, kind of thing. Then yeah, it's not really that big of a surprise. But at the same time, if that's not the case, and this ends up being one of those times where the market just simply continues to be irrational, and you are here applying very rational thoughts to a market that does not care for your fucking rational thoughts, don't be surprised if you end up being sidelined. So that's essentially the gist of the message that I wanted to send. Um, Truthfully, I don't even know what the point of this video was. Really, I just haven't made a video in a very long time, and some of you were asking for it. I hope this fills your needs and satisfies you. But I do appreciate you guys sticking with me, and how much value you get from these videos and all the messages and kind comments that you give me. I really do appreciate all that stuff. Again, if you do want to support me to a greater extent, using my Bybit referral link is the greatest way to support me. And that also means that you are eligible for giveaways in the future. So if you want to actively trade on my Bybit account, that would very much help me, and I'd be very appreciative of that. And there might be some more incentives in the future later on down the line. Potentially a free Discord coming up soon, so keep an eye out for that. Maybe later this month, who knows? And yeah, thank you guys so much. Much love to you all, and take it easy.